Welcome to our morning classes, and our subject is CA Final Indirect Tax Law. So students, in the previous class, rather previous both classes, we were deliberating on a very crucial and important aspect in GST, that is the taxable event, which is supply. Now, to understand supply, if you recall, what we understood is supply is basically the commercial transactions which were earlier known by different names like sale, provision of service, manufacture, bringing into a particular local territory. All these things are now merged into one single word, which is supply. Now, when you have to understand supply, there are three stages in understanding supply. So first is this outer box, as you can see, represents all our commercial transactions that we enter into. Now from this, you have to first identify those transactions which the lawmaker do not want to consider as supply. So this is our exclusion list. This is our negative list of supply. These are listed out in Schedule 3 of the CGST Act, SGST Act. Plus there are some notification circulars which also provides for what will be regarded as not a supply. Now, after you have identified and removed those items, removed in the sense that now you will not treat these items as a supply. So these will be not regarded as a supply. Then what is left, that is the inner box, represents the remaining commercial transactions other than those which are part of no supply. Now out of this inner box, again, the step 2 is to now apply the definition of supply, which is given in section 7 bracket 1, read with all its clauses, clause A, clause AA, clause B, C, and then finding out what finally will be treated as supply. Again, you will find some transactions which will again not become a supply, but here the reason for these transactions not being regarded as supply is because they do not pass the test of becoming a supply. They do not satisfy the conditions of becoming a supply. Hence, they are not treated as supply. So finally, you are left with this final box, which will be the supply under the GST law. Now, this particular concept, this particular definition of supply requires you to satisfy some basic requirements. So first, there should be some form of supply. So let us call it as some type of commercial transaction, sale, barter, exchange, lease, renting, hiring, etc. Second, this should be of goods or services. Third, this should be against a consideration. And fourth, this should be in the course or furtherance of your business. So these four requirements make up the main element, main concept of supply. Yes, there are carve-outs, like in case of import of service. This business requirement has been relaxed in clause B of section 7.1. Then in case of those items which are specified in schedule 1, this requirement of consideration is relaxed in section 7.1c. So certain concepts you need to understand: concept of goods, services, consideration, business. We have dealt with all this in complete detail in the previous class. Plus, we understood that after you identify what is a supply, that is this part of your entire box, then you have to also classify this supply into whether it will be supply of goods or supply of service. This is done through section 7 bracket 1 capital A and section 7 bracket 3. What it requires is, again, there is a specific schedule, Schedule 2, which will help you classify your transactions into transactions of goods or transaction of services. And then there are again some notification circulars clarifying what will be supply of goods, what will be supply of service. Then finally, in the previous class, we also understood the taxability of specific type of transactions which are bundled up, that is, two or three transactions are supplied as a common package. In such cases, the law says identify whether your package can be called as a composite supply or whether your package can be called as a mixed supply. So if it is composite supply, then out of the various elements of the package, that item, which may be of goods or of service, which is the principal supply, that will be considered for taxability. It means the entire package will be taxable as if it is the supply, which is the principal supply. However, if your package does not satisfy the definition of composite, but it is satisfying the definition of mixed, then in such cases, your package will be taxed by taking the rate of that supply, which is highest among all the other supplies. So that is what is the tax treatment of composite versus mixed supply. Students, so in the previous two lectures, when we understood the concept of supply, these were the various aspects covered. Alongside that, I resolved all your queries. Still, if anybody has any particular query, any particular doubt, we can first take up your queries and doubts from the previous chapter, and then I will move on to the next chapter. Students, if anybody has a query, you may kindly put across query relating to the previous topic, previous concept of supply. Okay, Radha is saying she has no doubts. Anybody else has a query or doubt? No? Chalo then. Let us go to our topic for today. Now, students, we are in the next very important topic, concept in this chapter. Now, let us understand, students, one very important point, that every taxation law has one section which is called as the charging section. What is this charging section? So the charging section is the section which creates the levy of that tax, which specifies when that particular tax shall be levied, shall be imposed, on what transaction it will be imposed, when it will be imposed, who is required to pay the tax, and so on. Now, since we are at the final level, I would like to also include some important judgments. Like if you remember in the last class, when we were discussing section 7, subsection 1, clause double A, small double a, which was a latest amendment in the definition of supply, I had explained to you an important judgment in case of Kolkata Club, because that judgment was the origin or was leading to the concept of section 7(1)AA. In that particular case, we understood that because there was an honorable Supreme Court judgment which excluded a particular type of transaction from supply, but the legislature, the parliament had the intention of treating it as supply. So the way out that the Parliament, that the GST Council brought out was amending the definition of supply itself by introducing a new clause, small double a, and through that clause, which was also mentioned in the explanation to that clause, that this particular type of transaction, which is between a body and its members, where even the body is unincorporated. So, though in the eyes of general law, an unincorporated body and its members are treated as one in the same, but for the exclusive purpose of GST, they would be considered as distinct, they would be considered as separate persons, and the transactions or activities between them will be deemed to be a supply. And then the explanation of this clause said, sorry, the explanation to this clause further said that they will be deemed to be a supply irrespective of any contrary judgment of the court. So, through that section amendment, a judgment of the Honorable Supreme Court was bypassed, was overridden. Now, on similar lines, I would like to start with an important judgment for charging section, which is Govind Saran Ganga Saran. Now, this is a very old judgment of the VAT law. That is, this is much, much prior to the GST law. But it made out a very important, you can say, principle for charging. It said that charging of any tax will require some important elements. If any of those elements are missing, then the charge itself will fail. It means that tax cannot be levied. Now, what are the elements which this judgment, old judgment, listed out was that in order that a tax be successful, it should be specified what is your taxable event, that is on which the tax will be attracted. It should specify the taxable object, that is on what the tax is imposed. Then it should specify who is the person liable to pay. And finally, it should provide the measure. Measure means how to compute the tax. Now, we have got answer to two of these elements in the previous chapter. First, taxable event we know is supply. Taxable object we know is goods or services or both. Now, why both? You'll understand because we have the concept of composite and mixed supply, where a package of 2-3 items will be treated as one item. That is why the word both is used. Now, today we'll try to get answer to this. Now, all these 4 elements should be present in your charging section. Only then you can impose, you can levy that tax. If any one of this component is missing, your levy will fail. It means there will be no type of tax applicable despite of you making the entire law. So whenever you are studying any taxation subject, students, because this is a landmark judgment, I'll say this is a mother judgment because it has led to multiple other judgments. So that is why this judgment is quoted in all the judgments wherever there is a dispute that can you impose a tax. So these are the 4 important requirements which, when satisfied, can only lead to taxability. Now in GST, CGST and the parallel states SGST, in these acts, section 9 is the charging section, and in case of the IGST, Section 5 is the charging section. Now, we all know what is the difference. So, these two acts, they are applicable to transactions which happen within the same state, which we call as intrastate supply. Whereas IGST law will apply to transactions which happen between different states or union territories, which is called as interstate supply. Now, technically, what is inter and intra? That will be understanding in detail in later part. But broadly, the basic difference between CGST, SGST, and IGST is CGST, SGST law applies when the transaction is an intra-state supply, which simply means transaction happening within the same state. And when transaction happen between two states, then what is applicable is IGST, that is for interstate supply. Now let us go to the charging section. There is one question in my chat box of Kanhaiya Singh. But for the time being, Kanhaiya, I'm right now not answering your question. Maybe as we proceed, there is one part which is coming in the charging section, which I believe will address your question. And after covering that part, then I will explain you then I will answer your question in particular. So till then, you may just hold on. Fine. Now, students, this is the charging section 9, which is of CGST and the parallel SGST Act. So what does this charging section covers? If you see, there are 5 subsections to this charging section. Fifth one I've covered separately, so not covered here. Similarly, when you go to the IGST Act, you again have 5 subsections. Fifth one again I have covered separately, so not covered here. Now, we will understand these sections parallelly. Now, out of these 5 sections, subsections, the first that you need to study is subsection 2. Now, I'll say, sir, why? Because when you read subsection 1, it says subject to subsection 2. Now, see, these are some legal terms which I believe students now you should make yourself comfortable with. And now you should also start using these terms whenever you are writing any answer. Now, the first technical term which I am explaining today is the term subject to. Now, whenever you will find this language in any section, any subsection, any clause, what this clause or this particular phrase or these words mean? They mean that this subsection 1 is lower in application, is inferior in application to that provision to which it has been made subject to. So now when subsection 1 says that it is subject to subsection 2, it means subsection 1 is inferior to subsection 2 or subsection 2 is superior. So you should first understand, you should first apply subsection 2. And that is why I said we start with subsection 2. Now what does subsection 2 says? It simply says that since we are studying the charging section, you need to know that charging of GST on 5 types of petroleum products has been deferred and it will come into effect from some future date which will be informed to us by the government by way of notification, and obviously everything is decided by the council, so it will be on the basis of the council's sorry, it will be on the basis of the council's recommendation. Now, what are these 5 things? One is crude oil, which India imports, then diesel, petrol, natural gas, and aviation turbine fuel. Aviation turbine fuel is the fuel that is used in planes. Now, you should know that the gas which comes to us, which we are using at our homes, is chargeable to GST. Correct, na? Why? Because the gas which comes to us is not natural gas. It is LPG. Similarly, the gas which is used to drive many vehicles, where you say CNG. What is the full form of CNG? Compressed natural gas. So that is what is the difference. So gas which comes to our house is LPG, liquefied petroleum gas. It is not excluded in this table. So LPG is very much part of GST law. Now, subsection 2, which is superior, we have understood that what it says, keep these 5 products outside of GST for the time being. So you can say total 6 things are outside GST. The first thing which is outside GST is alcoholic liquor for human consumption, and this is outside GST as per Constitution itself. Because when you see the definition of GST in the Constitution's definition, they have kept the alcoholic liquor outside GST. So because of Constitution, alcoholic liquor, which is for human consumption, is already outside GST, that you'll find in the main charging section also. And subsection 2 of the charging section has kept these 5 products outside. If you see the parallel IGST Act, IGST Act subsection 2 is also the same. It says that again, these 5 products, there will be no levy of IGST also, and the levy of IGST will happen from some future date, which will be informed to us by the government. Now we come to the main charging section, which is subsection 1. What does subsection 1 of CGST and parallel SGST Act says? That there will be levied a tax. So we are talking about charging section, and charging section has to talk about when the tax shall be levied. So it is saying that we will levy a tax which will here be called as CGST. When you read SGST, only this one part is changing in SGST section 9(1). Over there it is saying which will be called as SGST. And when you read section 5 of IGST Act, many things are changing over there, but this one word is over there changing. It is called as integrated tax. So here, since we are studying CGST, it is saying there shall be levied a tax called as the CGST. On what it shall be levied? It will be levied on all intrastate supplies, which may be of goods or service. So again, what is the charging or the taxable event? The taxable event is supply. What is the taxable object? It is goods or services or both. So again, this is repeated. Now we need 2 more things. What are the 2 more things? So total 4 things are required as per Govind sir and Ganga sir. Taxable event, that is supply. Over here it is intrastate. In IGST it will say interstate. So what is covered is firstly supply. Second, on what it is levied, that is the taxable object. It is saying goods or service. Third, who is required to pay, and the measure, that is how you will compute. That also has to be specified. So that we'll find here. But firstly, there is an exception which says except alcoholic liquor for human consumption. Now this is kept outside GST as per Constitution, so it is by default coming in the charging section. And again, very recently, there was a lot of dispute whether this undenatured extra neutral alcohol, which is in short called as ENA, which is also called as rectified spirit, whether this item will be covered in GST or not. Now, importantly, what is this ENA or rectified spirit used for? So students, you should know that it is the main raw material for manufacture of the alcoholic liquor, whether this is in GST or not. Now, interestingly, just to inform you, there was a case going on in the Honorable Supreme Court over this point. And somehow, before the judgment came of that particular decision, this amendment was brought into our act saying that this is not covered in GST. And let me tell you, After that, the judgment that came was because the judgment or the dispute was that whether GST is applicable or the other laws, which are our old laws like VAT and excise, whether they are applicable. So interestingly, the Honorable Supreme Court judgment has said that, or basically, students, the issue was whether this raw material, which is ENA or rectified spirit, can be called as alcohol. Because if it will be called as alcohol, it will fit in this exception to GST, and automatically the earlier taxes of VAT and excise will become applicable. But if it is not fitting into alcohol, then GST will be applicable. So the main dispute was whether it is alcohol or not. Interestingly, Honorable Supreme Court said that it is alcohol because it has all the components of alcohol, but still it is not leviable, or it cannot be leviable to earlier taxes, VAT and all. It means it should fall in GST, because what is excluded from GST is alcohol for human consumption, and this ENA or rectified spirit, even though alcohol, it is not in that form that it can be used for human consumption. So be clear, entire alcohol industry is not outside GST. What is outside GST is only alcoholic liquor for human consumption. I hope you all know that alcohol is used for manufacturing many things. So alcohol as a product is used in your pharmaceutical industry, where many of your cough syrups, etc., includes some component of alcohol. It is even used in your toiletries, where certain shampoos, etc., are made based out of this alcohol. So alcohol in itself has multiple uses, but only where it is for human consumption, it is outside GST as per the constitution. Now, interestingly, this judgment was actually favoring that GST is applicable. But even before the judgment was delivered, somehow the GST Council felt that they should, by making an amendment, keep it outside the GST law. That is why this amendment was brought in, which has actually kept outside the GST law. But had the Supreme Court judgment come earlier, maybe this amendment would not have been brought in, because as per that Supreme Court judgment, ENA is very much leviable to GST, or could be leviable to GST, because it is not alcohol for human consumption. It is having alcohol properties, but that is not suitable for consumption. It is so strong that if a person consumes it, the person will die. And that is why it said that it cannot be for human consumption. And the moment it is not for human consumption, you can very well levy GST. But before that judgment came, the parliament had already amended the definition, or sorry, the charging section. And hence, interestingly, despite of the judgment being in our favor, we are now not levying GST on this because of this specific exclusion from the charging section itself. So see, sometimes such things happen. Now you have to understand the law from its complete perspective. You should also now compare it with judgments, because students, that will make your concept much stronger. And also in exams, if you are asked that type of detailed question, so it will be definitely very much helpful. So now we are requiring the fourth component, that is the measure. Now from here the measure part starts. What does further charging section says? It says this GST which we are imposing, which we are levying, will be computed on what? On the value, which will be determined by section 15, and at such rates not exceeding 20%, which will again be notified by the government on recommendation of council. So the next component, that is the measure, how much GST you have to pay, or how the GST will be computed. It says two things: value and rate. So the charging section has provided you the measure also. So there is measure, which is the value, and it has to be multiplied by the rate. Value, which will be determined by section 15, rate, which will be notified by the government, and the maximum rate of CGST can be 20%. So as you can see today, the maximum rate of CGST on few products is 20, not beyond that, right? Now coming to another component, which is our third component, that is, who is the person liable to pay? Then the last part of it says, and this shall be collected. So we are levying it on supply of good service, but it will be collected from whom? It will be collected in the prescribed manner. And who is the person who has to pay? The person should be a taxable person. So it will be payable by a taxable person. Correct? So all the four components are present. So Govind Saran, Ganga Saran judgment is very much satisfied here. Correct? Students, one thing I was expecting that I just gave you reference of another Supreme Court judgment, but I have not given the name. So I was expecting that one of you in the meantime will search for that Supreme Court judgment. Students, please develop this habit. You are at final level. See, there are hundreds of judgment under GST. We will not be discussing covering all of them because I want to limit for the time being your syllabus which is relevant to exams. So I will not be referring to all the judgments, but whenever I'm mentioning something, I want to develop that curiosity. I want to develop that attitude in you that you should try to figure out what is the relevant judgment for that. So I was just mentioning about a judgment. Try to search it. If anybody finds it, put it in the chat box. Now I have few questions. Kanaya, your question I'll answer later. As I said, it will be covered. Now, CNG not part of GST, question mark. Okay. So I mentioned that LPG is definitely covered in GST because it is not listed in those 5 products. And also I made reference of CNG. So Radha is asking, sir, then whether CNG is leviable to GST or not. So Radha, again, see, my role, frankly speaking, will not be to give you all things ready-made. I want that at least the generic things you should try to work out. So intentionally, when I was explaining the part subsection 2, I gave you answer for one part that the household LPG is not covered in those 5 petroleum products and hence GST is leviable. But at the same time, if you observe, I also made reference to CNG. I gave you the full form, but I did not expressly mention whether GST is applicable or not. Same reason. See, I want you all to now be more proactive because that attitude, once you develop, students, you will be blessed for your life. Because see, till the time you are a student, somebody like we here at BOS will be helping you, guiding you by becoming your teachers and mentors. But in future in life, you should have this attitude of self-learning, self-studying. This is what I'm trying to develop. So as I said, certain things I will refer. I may not give you the answer or directly give you the, like in this case, the judgment, right? Please develop this habit that you will find out the answers for that. You will come back to me with the answers either in the same class or maybe in the next class. So students, I'm keeping this question open that whether CNG is leviable to GST, which is Radha's question, right? Radha has put one more. So we are not charging GST on the ENA. Yes. So interestingly, Radha, that is what is the point. Even though the judgment has come in our favor, because of that judgment, we could have levied GST on ENA. But before the judgment was delivered, for some reason, the government felt that let us exclude it from the charging section. Maybe I think so. The government and the council had a feeling that maybe the judgment will go against them. So better as a proactive measure, they decided to exclude it from the charging section. But interestingly, the judgment is in favor. Now see, again, when we are referring to judgment, students, what I want you all to do is that not only know the judgment, try to decode the judgment. When I say decoding the judgment, what it means? So it means that why the judgment is so. Like I just gave you the answer for this, that in the judgment, they have said that this particular product, ENA, which is also called as rectified spirit, can be leviable to GST. And I also gave you the reasoning. What is the reasoning? The reasoning is that what is excluded by the constitution from GST is alcoholic liquor for human consumption, right? And if you read this judgment, which is very beautifully crafted, the judgment has explained through all the scientific and the technical proofs that ENA is in such state, is in such form that it cannot be consumed. If it is consumed, then that will be leading to loss of life because it is so strong that humans cannot consume it. So that is what is the point, students, that is the reasoning. So I want that whenever we are discussing or understanding a case law, also develop the approach of decoding the case so that you develop the logic. So what does the constitution says about GST? It says GST is a tax which is on supply of goods or service except liquor for human consumption. So what is excluded by the constitution from GST is only one thing: alcohol for human consumption. And if you read this judgment, you will find that they have come to the conclusion that ENA rectified spirit is in such state that even though it has alcohol properties, but it is in such state, such concentration that it cannot be consumed. So it cannot be called as liquor for human consumption, and hence it can be levied to GST. So decoding of the judgment is equally important. Fine. Moving ahead. Yes, Radha has shared me a judgment. I will not say whether it is that judgment or not because I want others also to just do some research parallelly. I will give you time up to the next class. You can come back to me on this point up to the next class. I'm okay with that. So let us proceed. Fine. Ravinder, I am a taxation lawyer. Great. Okay, Ravinder. ठीक है. So Ravinder has given one answer for whether CNG is leviable to GST or not. Right? ठीक है. Let's see, Ravinder. We'll find out very soon. Let others answer. Wow. Kanhaiya also has given the answer for the judgment. Interesting. That's great. Fine. So if you all have found out the judgment, just save that link, and after the class is over, I want you all to also go through that judgment, right? So I'll wait for others before I inform everyone what that judgment is, the citation. But whoever has got the judgment, you may please ensure that you will read that judgment after the class. So students, this is our charging section of CGST, which says that central tax will be levied on intrastate supplies of goods service except liquor and except this ENA. So these two things are now excluded. And on what measure, how it will be measured? So it will be on value multiplied by the rate. Value is given in the law. Rate will be given by the government by way of notification. And finally, it will be collected in the manner prescribed. And who has to pay it? The taxable person has to pay it. Now, what is this phrase meaning? Again, students, wherever this phrase will come, please make a note. Wherever in the act this phrase will come, what is the phrase? As may be prescribed. It means what you have to refer to is rules. So this phrase, as may be prescribed, means where this prescription is given, where it is written in the rules. Like for rates, you found that where you will find the rates, the rate will be found. Now, wherever this word is used, as may be notified, it means you have to refer to something called as notification. But wherever this phrase is used as may be prescribed, it means you have to refer to rules. Correct? Now comes the point, who has to pay the tax? A taxable person. Now students, if you recall the definition of taxable person, it means two people. One, who are already registered. So let us say registered persons, plus who may not be registered but are liable for registration. So those who are already registered are taxable persons, plus those who fit in the registration requirement, which we study in the registration chapter, that was the threshold, and that is why they are liable to register. So both these persons together are called as taxable persons. Okay. 1 second, students. I'm just stopping the screen sharing for a reason that now you all are giving me some answers. I want to just make a note of these answers somewhere so that later on we can check and discuss this. But I do not want you all to see these answers. So for that, stop the screen sharing. Just let me copy your answers from the chat and keep it saved in a particular place for later reference. So different people are giving me different answers. Okay, I cannot copy from the chat. Interesting. United. State. So one judgment is given to me here. Rohan has given me one judgment. Okay, this is also a good idea. Radha, I'll do that. And then Kanhaiya and Radha have given me a common judgment. Okay. Let me just, as per Radha's instructions, she says, sir, copy, take a screenshot and copy paste in Word. Okay. Good suggestion. So let me do that. Fine. Interestingly, I have got answer on CNG also, but there are two opposite answers. That is again interesting. So someone has said CNG is taxable to GST and another person has said it is not taxable to GST. Good. I like this. So again, students, this is your research work for the time being, that you have to come back to me in the next class with reasoning. I don't simply want answer yes, no, because now I have got conflicting answers about CNG. One person has said it is leviable to GST, another person is saying it is not leviable to GST. Good. So students, I hope you got the charging section, the main section, subsection 1, which says that CGST will be levied on intrastate supplies. Now let me take you to subsection 1 of section 5. Now this subsection 1 of section 5 is mutatis mutandis to section 9 bracket 1. So 5 bracket 1 is mutatis mutandis to 9 bracket 1. Now here I am giving you the second legal phrase. So one phrase which we learned today is subject to, the meaning of that. Now I'm giving you one more legal phrase. What legal phrase I've just mentioned? Now whenever this phrase is used, what it means? It means so now how I use this phrase? I said this charging section 5 subsection 1 of the IGST is mutatis mutandis to 9 subsection 1 of CGST. So I'm comparing 5.1 of IGST and I'm saying that this is mutatis mutandis to section 9 bracket 1 of CGST. So when I say this section is mutatis mutandis to this section, what I mean, it is same with necessary change. Now you'll see the practical application of this mutatis mutandis here. So it is same. Why? This entire part is same to same what you read in 9.1. That is mutatis. But it has necessary changes, which is mutandis. Now what are the changes? Over there it was said central tax. Here it is said integrated tax. Over there it was said on intrastate supplies. Here it is saying interstate supplies. This is the mutandis part. And what is mutatis part? The same part. Remaining everything is same. So again here it is said subject to subsection 2. What will be the levy? There shall be levied tax called as IGST, that is integrated goods and service tax. On what? It will be levied on all interstate supplies. Again, supplies will be of good service or both, except again this exception part, which is again same. Then the later part is also same. On what? On the value determined as per 15. And again at the rates which is now not exceeding 40%, because we all know IGST is a total of CNS. Now again, this is the mutandis part, because this is the part which is different, but it is necessary. So this is the mutandis part. So the rate not exceeding 40%, again the rate will be notified, and how it will be paid? It will be paid in such manner as may be prescribed. So again, you have to go to the rules, and again paid by whom? Paid by the taxable person. So 5.1 is mutatis, means same to 9.1. But at the same time, it is mutandis, that is necessary changes. Like here, it is saying IGST. Here it is saying interstate supply. Further, it is saying 40%. This is logical because this difference has to be there between C and I. Correct? So another important legal terminology, mutatis mutandis. Remember one thing, don't use this in exams. You cannot say, while let us say you have already written some answer in some question number 1B, and now you are answering question 4A, and you want to say that, okay, it is same. You cannot say that this answer of mine is mutatis mutandis to that answer. Sorry. Even if similar provisions are there, you should write again. So don't use this in your exams. But for all your professional life, you should know the meaning of this terminology. Now, there is nothing to be decoded in 5.1. As I said, it is mutandis to 9.1. So we have understood 9.1 in detail. The same application is over here. I'm sure you don't have any questions. But what is very different is this part. This, students, we need to understand and decode, right? Go through this. I'll just come in a minute. Now, students, one more technical word or technical point today. So first one was subject to, second was mutatis mutandis. Now the third one is this. Many times when you're reading law, it may be any section, rule, etc. After the main, let us say here, this main section, many times there is a para in the main section which starts with these words: provided that, provided further that, provided also that. Now this paragraph which starts with this word is called as a proviso to the main section. So first paragraph is the main part, which is the above part, and then the second para, which starts with this word. Whenever the next para will start with this word, that entire para will be called as proviso. And since it is starting after the first para, so the first para is your main section, and this second para is the proviso to the main section. Now, what is a proviso? If in very simple words, I have to say, then proviso is that paragraph which acts as an exception to the main para. So either it may put an exception to the main para, it may put a condition to the main para. So it is carving out something from the main para. So main para is saying one thing, but this proviso para wants to say something different. So one, it can be saying completely opposite, that it may be a complete exception, or it is saying, okay, whatever main para says, that is fine, but this should happen, then only the main para will apply. That is, it may put a restriction or a condition. Now here, in this case, this proviso is serving as an exception. How? What does the main para says? The main para said that IGST Act will impose IGST on you, and it will impose IGST on all interstate supplies. So the main para is saying that on all interstate supplies, we will charge IGST. Now, when it is saying we will charge IGST, means who is going to charge this IGST? The IGST Act. However, the proviso says all your interstate supplies, one interstate supply. What is that? It is goods imported into India. In short, import of goods. Here, 5.1 proviso says that this one supply will be levied with what? IGST only. So IGST remains common, but the levy and collection of this IGST will not happen under the IGST Act. It will happen in accordance with the customs provisions. So I'll make it like this. All interstate supplies. All. Now this means supplies of goods, supplies of services. Out of this, within goods, if it is import. Now see, there can be import or there can be interstate, that is domestic supply, but between two different states. But where it is between two different countries, IGST will be levied and collected by customs. This is what is the proviso. For remaining everything, that is interstate supply of goods and for services, both import and interstate, all this IGST will be levied and collected by the IGST Act itself. So for all transactions of services, mainly import of service and the domestic interstate supply of service, IGST is levied, but by whom? By IGST Act. Similarly, for interstate supply of goods, which is happening between different states, IGST is levied and collected by IGST Act itself. However, for import of goods, IGST is levied and collected, but by whom? By customs. So this is, students, what is the important carve out, important exception created by this proviso. Please understand this. So the exception created is this. Now I'll read it in detail. What it says that provided that the integrated tax, that is IGST on goods. Now for the timing, I'm leaving this bold part apart just to make first see the main part clear. So it says that the IGST on goods imported into India shall be levied and collected in accordance with provisions of Section 3 of the Customs Tariff Act. Now, interestingly, everything they are doing as per customs. What all things they are doing as per customs? They are taking the value also as per customs. Said act means customs. Then you have time of supply. The time of supply also, that is when the duties will be levied, is also as per customs. So everything, time of supply, valuation, everything will be decided by the customs law. So you are charging IGST. You are not charging customs duty. Custom duty will be charged on import, that is as per Customs Act. We are not talking about customs duty. We are talking about IGST only. But IGST will be levied, collected, but by whom? By customs. So customs will doing everything for import of goods. So it is like this, IGST and custom both are brothers. So IGST is saying, boss, I am levying this tax, but you do everything. The timing part, the valuation part, the collection part, everything you decide. I hope this is clear, students. Now, within this proviso, there is again an exception. So out of all import of goods, one goods will not be covered in the proviso. It means it will go to the main section. What is that one goods? Goods which may be notified by the government on recommendation of council. So for certain imported goods, this proviso is not applicable. And when this proviso is not applicable, it means the IGST on those imported goods will be as per the main para. Main para means it will be levied and collected by the IGST Act only, not by the Customs Act. Correct? Students, I hope this point is clear to everyone. Right? Yes, Radha, your interpretation is correct. Now, I come back to the question of Kanhaiya. Kanhaiya had asked me one question some time back. What is Kanhaiya's question? Let me answer now Kanhaiya's question. So Kanhaiya had asked me some time back, sir, Schedule 1 related to import of service without consideration. What about goods without consideration? So Kanhaiya, the answer is, once you're talking about import of goods, it will be governed exclusively by the IGST Act, but it is falling in this proviso. And since it is falling in this proviso, the levy, collection, valuation, everything will be done by the Customs Act. Now, answering your question, if import of goods is happening without consideration, see, if anything is happening without consideration, there can be no IGST, because for levying IGST, there has to be a supply. Supply requires consideration, and only import of service has that relaxation that if it is done without consideration, it will be allowed. When you are talking about goods, if it is done without consideration, then as we have seen Schedule 1, in Schedule 1, only when it is covered, then only, Kanhaiya, you can levy tax on import of goods or service, but provided it will fall in Schedule 1. So Schedule 1, Kanhaiya, has given different transactions on which you will levy tax, that is the GST, even without consideration. So answering you, only where your import of goods is happening in one of the situations given in Schedule 1, like it is between distinct persons, it is between related persons, it is between agent and principal. Only in those cases, without consideration, it will be taxed. Otherwise, it will not be taxed. So students, I hope everybody understood subsection 1, which is the main charging section of both the acts. Rohan, I'm coming to that, beta. Allow me some time. Right? Now in this proviso, which we just studied, of the IGST Act, which said that for import of goods, the IGST which you have to levy pay, this entire IGST will be levied, collected, everything by the customs, right? However, this proviso has an exception that if some goods are notified by the government, they will not fall in this proviso. It means they will be covered in the main section and the levy collection of IGST will be done by the IGST Act. Now, question is, are any such goods notified? Answer is yes. What are those goods which are notified here? So, if you remember, we have this online money gaming. So, online money gaming, which is put in the definition of specified actionable claim and it is leviable to GST if this online money gaming is happening from outside India. So in short, you are playing a game on an app on a website which is a foreign based company's website. So you are playing some online gaming and that online gaming which is for some money is by some foreign entity. So let us say the online gaming company is a foreign entity, not an Indian entity, and you are playing that game, you are participating in some bet, you are putting some money on stake. Now this becomes specified actionable claim. Actionable claims are goods, so it will become goods. Now whenever a foreign gaming company will provide this online money gaming to you, this will technically become import of goods, but that import of goods will not be covered by customs because it is an exception to the proviso. It will be covered by the main subsection 1. It means the levy collection, everything will be done as per the IGST Act. Is this clear, Rohan? I hope everybody got your answers, whatever questions you had till now. So we have covered section 512, section 912. Correct? Good. Now, students, we come to subsection 3 and 4. Again, the subsection 3 and 4 of 9 and 5 are mutatis mutandis. So you study any one, you understand both. Now, what are both these subsections dealing with? Both these subsections are dealing with what we famously or commonly call it as RCM. Correct? Now, students, what is this RCM? So RCM is now understand one thing. What is happening in normal cases? So you have a supplier, you have a recipient. Now, one thing is for sure, supplier is supplying goods or services or both. So supplier supplies you the good service. Now what happens normally? When the supplier has supplied the goods or service, the supplier will collect money from you. Now how will the supplier collect money? The general method is whatever is the price of this goods or service, the supplier will also add the GST component and this total amount, the price plus GST is charged by the supplier to the recipient and the recipient pays this amount to the supplier and then what supplier does, it will pay this amount of GST to the government. So what is the normal mechanism? Normal mechanism is supplier will collect the GST from the buyer and this GST which is collected by the supplier is then transferred or paid to the government. This is the normal mechanism. Now, in reverse charge, this mechanism is reversed. Now, what will happen in reverse charge? So this is what is called as normal mechanism. So let us call it as forward charge. See, there is no such word used in the law. We are using these terms RCM, FCM, correct? So this is the normal mechanism. So let us call it as the normal charge mechanism, or it is also many times called as the forward charge mechanism. Now, what is RCM? Same thing is happening. There is a supplier. Supplier is supplying you goods or service or both. You are the buyer. Now here the supplier is only charging and collecting from you the price, not the GST. So supplier has not charged and collected the GST from you, and you will yourself go and pay this GST to the government. So as you can see the difference here, supplier along with his price also adds GST in the price. So supplier is collecting the GST from you, and this GST the supplier is going and paying to the government. This is normal method. So let us call it as normal charge or forward charge mechanism. Opposite to this, what will happen in RCM? Supplier will only price. So supplier is charging only the price, and supplier is not collecting the GST portion. But since GST is applicable on this, the recipient will itself go and pay the GST to the government. So this is what is RCM. So in RCM, this is what happens. This is what is the difference between FCM and RCM. Now, Radha, I'm coming to that point. Now, the main question is, why is there FCM? Why is there RCM? So please understand, for here, for this particular point, students, I will request you to just apply a normal commercial logic. You go to a shopkeeper. Regularly, we are going to buy something. Let us say it is a grocery shop, a kirana shop. Now, day in, day out, that kirana shop, in fact, we ourselves visit the same shop twice or thrice in a day. So early morning, you go there to buy milk, to buy bread, to buy butter. Somewhere in the afternoon, you or your mother will go for getting some dal or something. In the evening, maybe any of your family member or your dad, while returning home, is bringing something else from that place. So that shopkeeper is selling multiple items throughout the day. Now, GST is applicable on majority of them. Now, please understand one thing. The law says GST will be on supply of goods service. Fine, done. But when it comes to paying the GST to the government, the law is designed in such a manner that tomorrow, in future, the government should be in a position to keep a watch, to check if the correct GST is paid or not, and wherever there is any problem, take action. So if somebody is not paying, somebody is evading tax, in such cases, the government should be able to take some action. Now, government should be able to do the collection conveniently and also should be able to take the action conveniently on the person who is not paying the tax. Now, here comes the important point. From whom will the government do the collection? The government will do the collection from that person who is made liable to pay the tax. Now comes this forward charge and reverse charge. Now, who is made liable to pay the tax? The answer is the government sees it is convenient from whom to collect the tax. The government makes that person liable to pay the tax. Now you will find that in 90% of the transactions which are happening every day of goods or of services, 90% or maybe even more, the government says it is much convenient to collect tax from the supplier, and it is also convenient to catch the supplier in future if the supplier has not paid the tax or wrongly paid the tax. So because of convenience, in 90% or more transactions, the government has made the supplier as the person liable to pay the tax. And that is why we call this as the normal charge or the forward charge, because this is happening in 90% or more of the transactions. Understand this. So government finds it convenient that if tomorrow I have to do the checking, I have to take any action if the tax is not paid to us, then for us it is convenient to take action against whom? So in 90% plus transactions, it is the supplier. Why? Because like I gave you example of the shopkeeper. We are floating. We means the buyers are floating, means they are coming in, going out. But the supplier is stationed there itself. The supplier has a fixed place of business. Supplier is not moving anywhere from there, because when a person is doing business, you will have a fixed place of sitting and doing the business. So the government said that it is much easier for us to catch hold of this supplier if in future we find that proper GST has not been paid. That is why in 90% more of the transactions, the supplier makes the government makes the supplier as the person from whom they will collect the tax. Now comes reverse charge. Same logic. In few cases, the government found that it is not convenient to catch the supplier, but it is much convenient to catch the recipient. So wherever they found that it is comparatively convenient, comparatively easy to catch the recipient than the supplier, they decided to change the mechanism, and they said that, boss, you go, or you are the person who has to pay the GST to us. So they have made the recipient as the person who will be responsible for paying GST to us. But why? Because in these few cases, which now we are going to read the list, the government felt and government found that it is more convenient to catch the recipient. So, since it is convenient to catch the recipient as compared to the supplier, so the government has shifted the mechanism and made it ulta, reverse. That is why we call it as reverse charge. Now, this is what is covered in subsection 3 and 4, both of CGST and IGST, it is same. What it says, the government, obviously on recommendation of council, will specify. What it will specify? That which category of supply of goods or service or both. So it will specify those supplies where the tax will be paid under reverse charge, which means what? Tax will be paid by the recipient of such supply. And why they will be paying? Because we are applying all the provisions of this act to these recipients as if they are the person liable for paying the tax. In short, in subsection 3, and that again similar thing you'll find in subsection 4, the government has made the recipient responsible for paying the GST to them. So subsection 3 says we will we will specify on which supplies the recipient has to pay the tax. And in all those cases, the tax will be paid under reverse charge, which means by the recipient. Similar thing is provided in subsection 4. Again, the government, on the recommendation of the council, again by notification, will specify. Here again, what they will specify, a class of registered person who, in respect of supply of specified category of goods. So two things will be specified. One, the registered person who are covered, and again what supply is covered. And most important, this supply they are getting from an unregistered supplier. So for 9(4) applicability, one thing is for sure, supplier has to be unregistered and recipient has to be registered. So for some supplies, which supplies again which are specified, for some supplies where the supplier is unregistered, the recipient is registered, we will again make the tax collection on reverse charge basis. That is, we will make the recipient pay the tax. So the tax collection would be by the recipient. We will collect the tax from the recipient in respect of these specified supplies. And most important, again, all the provisions of this act will apply to this recipient as if this recipient is the person liable for paying the tax. So remaining everything is same. So in 9394, what is important or what is the difference? In 93, there is no requirement whether the supplier should be registered or unregistered. So supplier may be registered or unregistered here. Similarly, recipient also may be registered or unregistered here. So in case of 9.3, this status of supplier and recipient is immaterial. What is only important is the specific categories of supply. But in case of 9.4, again, there is a specific categories of supply which will be covered. But here, the condition is that the recipient is a registered person and the supplier is an unregistered person. So this is the basic difference between 9394. In any case, you will understand both the 9394 by the list which they have given in the notification which we are going to study, right? Same thing you will find in 5354, no difference at all. The government may, on recommendation of the council, again specify the category of supply where the tax has to be paid under reverse charge, that is by the recipient. And again, all provisions of this act will apply to the recipient as if the recipient is the person liable for paying the tax. So this word is exactly section 5.3 and 9.3 are copy paste. Similarly, 9.4 and 5.4 are copy paste. What it says, the government may, on recommendation of the council by notify, specify what? Again, a class of registered person. So here, this is what is to be seen, where the recipient is a registered person, supplier is an unregistered person. Again, on what supplies? On some specified categories of supply, which list is notified in the notification. Again, the tax on this is paid on reverse charge basis. That is where the recipient has to pay the tax. And how? As if the recipient is the person liable for paying the tax. All the provisions are made applicable to the recipient. So language wise, both are copy paste. There is no difference at all. The difference is only that in 9.4, supplier has to be unregistered and recipient has to be registered. And in 9.3, that requirement is not there. So 9394, the basic difference is this. As far as 9 and 5 are concerned, both subsections are copy paste in both the acts. Now, what are these items which are covered in reverse charge as per 9394 or 5354? That we will have to study, which is by way of a notification. So now we start with the notification. This is the notification for the purpose of reverse charge. Now we first go to the notification where we are dealing with RCM for goods. Now let me inform you students, this list is not very relevant for the exams. That is, it is not very compulsory to learn this, but still I will suggest that you should know this list because this is very, very important. Though there may not be a direct question, but even in exams, you may expect to get a case study type of questions. So I will recommend that you read and remember this list. Now, firstly, we are seeing the list of those notified supplies of goods which are under RC. Now, what are these goods? First is cashew nuts, maybe with the outer covering or not, that makes no difference. Second is tendu leaves, that is the one which is made to BD. So BD is rolled, the BD content, which is the tobacco, it is rolled in some leaves. That leaves is called as BD wrapper leaves or tendu leaves. Similarly, the tobacco leaves which are used to make tobacco. Now, in all these three cases, who is the supplier? The supplier is a farmer. So RCM will apply when a registered person, that is a registered business, is purchasing any of these items from the farmer. So when farmer is supplying these items to a businessman who is a registered businessman, farmer has been kept outside GST because the government does not want the farmer to get into the GST glitches of taking registration, doing online everything. So in order to relieve the farmer from this, they have put farmer into RCM where supplier is farmer and recipient is a registered person. So for these three items, a farmer is kept outside the GST. Then comes another item. Now, these are what? Some types of essential oils made from specific items, like they are to be made from specific fruits, but not citrus fruits. Now, what are these oils relating to? These oils are of peppermint or of other mints. Now, the names are given. So, whenever any of these oils are sold by an unregistered person to a registered person, then the tax is payable by the registered person. Again, the government, through this particular point, is trying to relax the compliance burden on the unregistered person, but only of these specific oils. Then comes silk yarn. We all know the silk is made by a silkworm. So you are getting the silk thread or silk yarn from the silkworm. Now, maintaining the silkworms is also a part of agriculture. So it also comes in the agriculture sector. It is called as sericulture. Now, in this again, who is making this silk yarn? Technically, it is the agriculturist. So whenever again an agriculturist, now here they have not used the word agriculturist, but I'm just giving you that analogy so that you can compare with the other point. So it is the person who is making this silk yarn. How? From the raw silk or the silkworms. So nothing but they are similar to agriculturists, because if you have seen how this is made, again it is a open area, something like a forest and all, and then on small trees these silkworms are made to uh, make the silk yarn, and from there the silk yarn or the silk thread is derived. So whenever this agriculturist of silk yarn is supplying this silk yarn to the registered person, again they want to keep the agriculturist outside the GST uh, problems. That is why they have said that they need not pay the tax, because the tax will be collected from the recipient. Then again comes another item, again relating to agriculture, that is raw cotton. Again, when agriculturist is supplying this to registered person, then the registered person is the person going to pay the tax. Again, agriculturist is kept outside. So if you see the first five, six items, what is the common logic flowing through it? The common logic flowing through it is that majorly they want to keep the agriculturist outside the GST clutches. Because we all know that whenever someone is covered in GST, you have to do everything online. And today, the level of compliance in GST, I'm sure in your articleship you will have faced this, is very high. You have to maintain proper records. And mostly you can say for now, complying with GST, compulsorily you should have computer, you should know how to use online things. Now you'll find that majority of these suppliers of these goods may not be in that position, condition to have a proper computer setup, or they may be in remote areas where there may not be proper electricity, internet. They may not have access to proper consultants because they are in very remote areas, small village places. So to give them the relaxation, the government has changed the mechanism in these cases to reverse charge, whereby the tax payment is put as a responsibility on the recipient. So the suppliers, which are mainly farmers, agriculturists, are given the relaxation. Then comes the next item of goods. Now here, the government has given relaxation to its own self. So where the supplier is government, they have kept themselves outside GST. Now, what is the first item? First item is lottery. So you all know many of the lotteries are managed and governed by the government. So wherever the state government is selling the lottery tickets to whom? To their lottery distributors. That is the persons from whom we go and buy the lottery tickets. So they are the lottery distributors. Now, firstly, the government sells the lottery tickets to them and they sell it to us. So since these are businessmen, they are well versed with the entire compliance. So the this burden of GST is shifted from the supplier, who is government, to the recipient, who are these lottery distributors or lottery vendors. Similarly, now you know this, that many times government in their government offices has many old items which they keep on selling. What are these old items? They're old vehicles, some seized goods because they may have seized it under various acts, or some old and used goods, waste and scrap. So it is nothing but the old items of their office. So in all government offices, many of the items after they become old, they become scrap. We all sell it. We all sell our household raddi and old items. Similarly, when government offices have any of these old items, they sell it. So they want to relieve government from the GST burden. So all government offices, whenever they are selling their old and used items to a registered person, they are saying that let the registered person be doing all the GST compliance. We want to keep government outside this. Then you have a specific certificate called as the priority lender certificate. Here, when a registered person, generally these are banks, gives to another registered person, the tax is payable by another registered person. And now a new item is added to the list. So in scrap industry, you'll find that many times the scrap sellers are unregistered person because they come on that thela gadi and collect the scrap from household and then sell it to big industries. So when these small vendors are selling the scrap to big industries, let the big industry do all the compliance so that these small vendors of scrap are kept outside the GST headache. So students see the logic in all these goods. First, farmers are kept outside the GST headache. Then in specific cases, government is kept outside. And in case of metal scrap, the small businesses who may be unregistered, they are doing or purchasing the scrap by going to each household. So they cannot be registered, they cannot do the compliance. So they have shifted the burden on the registered recipient, which is a big scrap dealer, or maybe the industry which is going to consume the scrap. Fine, students. So this is the list of RCM for goods. Now, what is very important for us in exams is RCM for services. But here we take our break, and after the break, we will deal with the RCM for services. Fine, students. So let us have a break. You all can also have some refreshment and you can come back. Now, Kanaya had a question. Sir, where business assets are permanently transferred, it is covered in Schedule 1. Correct? Now, what would be tax implication if assets are transferred temporarily? See, when you transfer asset temporarily, firstly, it becomes supply of service, not supply of goods. Now, supply of service will be also in Schedule 1 if it is to your relatives or to your distinct person. So, I hope, Kanaya, you got your answer. So, only where there is permanent transfer, then it becomes supply of goods and Schedule 1, Para 1 condition is impacted. And if it is temporary transfer, then it becomes supply of service. Schedule 1 can be attracted provided then you fit in Para 2. Correct? Now, students, we come to the list of those services which are under RCM. Now, here we are reading the list which is notified as per section 9.3 and later 5.3. Now, in this 9353 list, we will get to know what are the services and what are the underlying conditions for those services that will make it cover under RCM. Now, the first service which is covered under RCM is of Goods Transport Agency, which is called as GTA. So simply it is, if I have to put it in your simple words, so wherever you are doing goods transportation, see there are two types of transportation, goods transport and passenger transport. Wherever you are doing goods transport, not passenger, that will be covered here. Now, when we talk about transportation of goods, see the first step is you should check whether it is exempt. Now, this we will be studying in the exemption chapter because whatever is exempt, there is no question of students whether there will be forward charge or reverse charge. So first check out the exemption part. Now what is not exempt? That is, what is the taxable services? So after removing the exemptions, we go to the taxable GTA services. Now in this taxable GTA services, if certain conditions are satisfied, so exempt one you have to exclude, right? Now, if certain conditions are satisfied by you, then you fall under RCM notification, which we are studying now. But interestingly, in case of GTA, the RCM notifications does not makes it compulsory. Rather, it gives an option or choice to the GTA that if it wants, it can continue under FCM, and if it wants, it can switch to RCM. So once the conditions of this RCM notification are satisfied, you fit in the RCM notification, but RCM notification is giving you an option or choice. You have to decide as a GTA whether you want to be under forward or under reverse. Now, what is important to be noted, students, is that this option has to be exercised at the start of the year, and whatever option you have exercised at the start, that option will remain permanent for that financial year at least. If you want to change, you can change it, but that change is allowed only in the next financial year. So now we are going to understand what are these conditions. This exemption will study in the other chapter when we go to exemption. So for the time being, we keep that point aside. But for remaining items, which is not in exemption, which is you can say the taxable GTA service, now you have to check whether the conditions are satisfied. So what is the condition? The condition is that the supply of this GTA service, which is the service of transportation of goods by road, should be done to the following specified recipient. So what are the conditions? The recipient should be a specified recipient. Now, who are specified recipient? That you will find even in the on the right hand side, because the right hand side, as you can see, is also the list of recipient, and the same thing is repeated here also. So you study from here or you study from here, it is one in the same. So who are specified recipients? Factories, societies, cooperative societies, body corporates, partnerships, right? Now these one which I have underlined, you will find that these are the ones who are covered under some specific laws, like factories are governed by Factories Act, societies are governed by Societies Registration Act, cooperative societies have their own separate law, which is miscellaneous cooperative society. That so within society, cooperative society, there are multiple laws. Then body corporate, we know they are also established under their particular law, like the Companies Act, etc. And partnership is also having its own partnership law. So what you find in specified recipient, what the law has tried to cover, law has tried to cover those entities which are governed by their specific laws. Now, once these entities gets registered under their specific laws, so what will happen? The moment they get registered or established or set up under their specific laws, they become the specified recipient. Now, interestingly, only for partnership, the requirement or the condition is they may or may not be registered. But still, partnership we know is already governed by the Partnership Act, but here the registration condition is not compulsory. Right? So you have registered partnerships, you have unregistered partnerships, and I'm sure you have studied the difference at the foundation level. Now, besides these persons who are created or who are established under their specific laws, now we have those persons also in this list who are under the GST law itself. So registered persons of GST law, and I'm sure at inter level you would have studied this concept, casual taxable person. Even if you have forgotten, no worries. We will study that again in the registration chapter. Now both these, this and this, are the creatures of GST law. So one is a registered person of GST, one is a casual taxable person under GST. So if you observe the specified recipient list, students, if I have to give you one single word, one single analogy, so who they are covering under the specified recipients, the specified recipients are those who are created as per some law. So whoever are created as per some law should be your specified recipient. So what is the first condition? The recipient should be specified. Second, transport of goods by road. So we cover only road transport here, not the rail and other transports. And third, there is a consignment note. Now you'll say, sir, from where you have got this condition? That is as per the definition of GTA given in the notification. So the notification define a GTA. GTA is the person who is doing goods transportation by road and who issues a consignment note. So when these three conditions are satisfied, now your GTA service is covered in this RCM notification. But as I said, the RCM notification is not making it compulsory for you. It is giving you a choice, right? Now, when you say ki, what choice it is giving you, so it is giving you this choice. Now, the choice that it gives you is that if you want, you can exercise the choice of paying the tax yourself, that is FCM, or you have the option of not paying the tax yourself, which is RCM. Correct? Now, interestingly, As I said, this choice has to be exercised by you at the start of the year, and then throughout the year, you cannot change that choice. So if you opt for FCM throughout the year, you will be in FCM. If you opt for RCM throughout the year, you will be in RCM. You can change this category only after the end of the year. Now, if you are under RCM, you have opted for RCM, there is only one GST rate applicable, which is 5%. But if you are under FCM, within FCM, again, you have two options, 5, and now this has become 18. So 18. So within FCM, you have two rates which are applicable, either 5 or 18. Now you say, sir, what is the difference between 5 and 18? Why anybody will opt for 18? Because if you opt for 18, you get ITC. If you opt for 5, this ITC, which is otherwise available, is not allowed. So why will any GTA opt for 18? Because by opting for 18, the GTA becomes eligible to take ITC. And you know, whenever you get ITC, your output liability is reduced. But if you opt for 5, there is no ITC available to the GTA. So the first service, students, which is under RCM, is GTA service. And within GTA, first check if you are in exam. If you are exempt, no need to proceed further. You are outside GST, matter close. If your service is not exempt, so it means your service is taxable. Now check for the conditions. Is your recipient a specified recipient? Is your transportation is of goods by road? Are you issuing a consignment note? Right? All these conditions satisfied, then you fit in this RCM notification, but again, the notification gives you a choice. And within the choice, as I said, here you have two rates, 18% with ITC, 5% without ITC. And if you're in RCM, there is only one rate, which is 5%. Correct? Now, I'll just add one more point over here that you are providing this service to a specified recipient, but they should not cover some specific recipients because they are excluded. So what it says, reverse charge mechanism will not apply where your recipient of service is any of the government. What government? So it may be a department of government, it may be a local authority, or it may be any government agency. Now, when government is excluded, whenever the government has taken registration, but the registration is done only for the purpose of TDS under section 51. And most important, they are not going to make any outward supply. Means government is not making any outward supply. So simple, students, it means any government office that you see. So we have so many government offices around us. Majority of the government offices are what? They are only doing administrative work for the government. They are not making any outward supply. But they have to take registration because the GST law makes them liable to deduct TDS. So whenever they have taken registration under the GST law, making them liable to deduct TDS, then you need not deduct, you need not pay GST in such cases under RCM. RCM will not apply. This is what is an important point. So I'll just write over here, except where recipient is government registered under GST only for TDS. So students, whether RCM applicable or not, we have to test these 4 conditions, right? One is the person is a specified recipient, but except government who is registered only for doing TDS. This is excluded. Second, you should be doing transport of goods by road. And third, you are issuing consignment mode. When all these conditions are satisfied, you fall in this list. And then I've given you, once you fall in this list, you are given a choice. I hope GTA RCM is clear to everyone, students. Now students, we come to another very important service. The service is, in very simple words, lawyer service or advocate's service. Now again, check exemption chapter. If your service fits in the exemption, you have to exclude it because that will be outside GST. There is no question of forward charge, reverse charge. Then if it is not exempt, then it becomes a taxable. Which service? Lawyer service, and which is a legal service. So check exemption chapter. If the lawyer service is not fitting in exemption, now it is a taxable legal service. Now within taxable legal service, again you have to check for conditions. When these conditions are satisfied, you fall in this RCM notification. And here there is no choice, no option. It is compulsory RCM, tax payable by recipient. Correct? Here there is no option like GTA that there is forward, reverse, etc. And there is only one rate, that is 18%. Now, what are the conditions? First condition is your service should be a legal service. Second, the condition most important is that it should be given to a business entity. I'll just add a word. Your recipient should be a large business entity. Correct? And third condition, senior lawyer to any lawyer. This is outside RCM. Now students, make a note of this. I'm sure before this you all were having an understanding that all lawyer services will be under RCM. Sorry, this one lawyer service in under FCM and not RCM. So what are the conditions subject to which your service will be under RCM? So firstly, you should be advocate. Secondly, your service should not be covered in the exemption chapter. So what you are doing is a taxable legal service. You satisfy these conditions, so it should fall in the definition of legal service. Second, your recipient should be large business entity. And third, it should not be a service given by a senior lawyer to any lawyer. Once all these three conditions are satisfied, then you fit in the RCM notification. Tax will be payable by the recipient. Now in this, few concepts you need to understand. Firstly, what is a legal service? So basically legal service means service relating to, as now you can read here, advice, consultancy. So what is the service? Service is advice or consultancy or any type of assistance. So what does a lawyer do? The lawyer gives you advice on any legal matter. He does consulting on the legal matter, or where you require the lawyer to do your handle your case. So the lawyer is also doing this, what is called as representation service. Representation means, in our words, he or she is fighting your case before any court, any tribunal, any authority. Now, a lawyer who is one notified by the law institute. So like how we have the ICAI, you have the Bar Council of India, which is the institute for the lawyers. So that lawyer should be registered with the Bar Council of India. Now, the moment it is registered with the Bar Council of India, it is called as an advocate, and an advocate doing legal service. What is legal service? We just saw advice, consulting, representation in any branch of law. That makes you entitled to fit here. So the first part is done, legal service. Now, second part, who should be your recipient? Now, in case of lawyers, there could be two types of recipient. One is individuals and the other is business. So if individuals are coming to you, anyways, you'll study in exemption chapter, service given by lawyer to individuals, that is non-business, is always exempt, right? Second, service given by lawyer to those businesses who are small. Small means their last year's turnover is below the registration limit. That is also exempt. Hence, over here, I have purposely written large business because only when the lawyer is given service to large business. Now, what is large? That is business entity having turnover in last financial year exceeding the registration limits. Now, again, you know registration limit 20 lakhs, 40 lakhs, etc. So, whatever is the registration limit applicable to you, that registration limit, if the business entity is having turnover in the last financial year exceeding that registration limit, then that particular entity will be called as a large business entity. In this particular case, one second. So only in this particular case, the lawyer service is taxable, students, because if the lawyer is giving service to small business entity, that is anyways exempt. So I have indirectly created the second condition that the recipient should be a large business entity because small business entity is also exempt. So firstly, it should be a business entity, not individual. Second, the business entity should be a large business entity. Otherwise, the service of lawyer is anyways exempt. Now here, there are no other conditions besides this. Now the supplier may be individual advocate or it may be a firm of advocates, makes no difference. Further, the supplier may be a senior advocate or a normal advocate. Now you'll say, sir, who is a senior advocate? Again, senior advocate is defined to mean those advocates who have served for some minimum years as a lawyer, as an advocate, and who are nominated as senior advocate by the High Court or Supreme Court. So interestingly, becoming a senior advocate is not in your hands. Yes, you have completed some minimum years of service as a lawyer. Service means your profession. But besides that, the most important and interesting condition is it is the court, either the High Court or the Supreme Court, that they will decide whether you should be given the status of senior advocate. So only when they decide, they designate you as a senior advocate, you will be called as a senior advocate. Anyways, for us, that makes no difference. For us, that makes difference only in one scenario. That is where a senior advocate is giving services to any other lawyer, maybe senior or not senior. That is covered in FCA. Remaining all services will be under RCM when all these three conditions are satisfied. So students, I hope it is clear to you. Now, the third service coming under RCM is the arbitral tribunal service. So we have courts, we have tribunals, and within all this, we have something called as arbitral tribunal. Again, students, you have to first check whether it is exempt. Now, when it will be exempt, same like lawyer. So I can just write over here, same like point 2 above. So what conditions were applicable in case of lawyers? Same conditions are applicable over here, that where the arbitral tribunal is giving services to individuals or non-business entities, it is exempt. Similarly, where it is giving services to small business entities also, that is exempt. So in short, whenever arbitral tribunal is giving services to large business entities, only that is what is taxable, and that is taxable under RC. So this part is similar to your above advocates services, correct? Now we come to another service, which is sponsorship. Now in this case, the requirement is supplier should be a person, not a body corporate, and recipient should be a person who is either a body corporate or a partnership firm. Only when both these conditions are satisfied, then only sponsorship comes under RCM. So supplier should be other than body corporate, but the recipient should be a body corporate or a partnership firm. Only when both these things satisfied together, it will fit in RCM. If any one side is not satisfied, the service will be under FCM and not under RCM. Another important point to note, students, is it is covering sponsorship and not marketing. Now, you say, sir, what is the difference in sponsorship and marketing? So, when you are running an ad, what you are doing is advertising, marketing. That is not sponsorship. So, whenever you do an ad and there is expenses on advertisement, that will never be under RCM. Why? Because it is not sponsorship. What is sponsorship? So you find many of these shows, like you have Kapil Sharma show, you have so many shows going on different channels. You will find along with the name of the show, wherever they put Kapil Sharma show, they write sponsored by, powered by. They use these terms. And even during the show, Kapil Sharma or other keep on taking the names of these sponsors who have sponsored that show. So when any show, or let us say another example, any event. Now, what is the event? Best example, IPL. Right? Earlier we used to call it as some DLF IPL. Nowadays we call it as Tata IPL. What is this? So Tata has sponsored it. When Tata has sponsored it, the name of Tata is attached to that name of the event. So whenever IPL is used anywhere, they will use it or call it as Tata IPL, including on the trophy. So this is what is the difference between sponsoring and advertising or marketing. So in advertising marketing, you only put one specific ad. In sponsoring, your name gets linked to that event. It gets linked to that show. That is what is sponsoring. Correct? Now comes a very important category, that is services given by government. Who are they? Central government, state government, union territory, local authority. Now again, when they are giving services to large business entity, again see why I am adding this word large, because when you go to the exemption notification, you will find that in exemption in all these cases, first is lawyer, second is arbitral tribunal, third is government. This particular exemption is common. So in the recipient, whom they are excluding, whom they are exempting is small businesses. So where government is giving any type of service to small business entities, small means whose last year turnover is below registration limit. In short, they are not liable for registration. Then such business entities are excluded. They are kept in the exemption. So in short, when taxable will happen only when government is giving their service to large business entities. Interestingly, when you read the exemption notification, they have given a huge list of services where government services will be exempt. I am right now not going to that particular thing because that you will study in detail when you go to the exemption chapter. So obviously, one thing you have to assume that whenever we are talking about any type of FCM, RCM, you assume that we are only talking about taxable services, because if anything is exempt, there is no question of FCM, RCM. Okay? Now, here they have excluded some services from this list. Now, why they have excluded, you need to understand. This service which they have excluded is because that is covered specially below. So why they have excluded it from this list? Because that service they have specially covered here. So as you can see, the renting service given by the government is specifically covered below, right? So since this service is covered below by way of a separate entry, hence it is excluded from this entry. So first thing on which RCM will not apply is the renting service, but I will say under this entry. Why? Because renting service has a separate entry. Now, besides this, they have excluded these all services. Why? Because these they want to cover in FCM. So obviously, if they want to cover these in FCM, they are excluded from the RCM list. So either it is covered in FCM or again either because it is exempt. Now, what is covered in FCM? That is the services which is given by post office or the railways. So certain services of post office railways are exempt. Other than that, whatever services they are giving, like when you are traveling by railway, if it is not an AC coach, then it is exempt. If it is AC coach, the tax is paid by the railways by collecting it from you, that is under FC. So they have excluded these services because these services are either exempt or they are covered in the FC. Second, services which are in relation to aircraft vessel, which is inside or outside the port or airport. So services done in the aircraft, services done for the aircraft within the port airport is what is again covered in FCN. So port authorities, whatever they charge to you, that will be covered in forward charge. And last is transportation of goods or passenger. Goods transport, passenger transport is covered separately. It has its own separate set of rules. Like we just saw above, transport of goods has its own set of rules for RCM. So they want to exclude it from here because for that, you have to study it separately in the separate entry. And for passenger transport, anyways, it is under forward charge. So these three services given by government are excluded. That is what is point two. Point one, this service is excluded from RCM, but it is excluded from this entry because they want to cover it separately. Now, separately, what they have done that whenever the government is providing renting of immovable property services, then the tax under RCM would apply only when the recipient is a registered person. So if recipient is unregistered, then tax under RCM will not apply. That tax will go under FCM. So wherever government is giving renting service to a registered person, renting of immovable property. So this service, when given by government to registered person, that is only under RCM. I hope this is clear to you all students. Now again, both these are renting services. Now in this, there are two categories. Whether what you have given on rent, is it a residential place or it is a commercial place. Now here they are saying other than residential. So let me call it as commercial. So when you are giving your flat or bungalow on rent, RCM will apply where supplier is any person, but recipient should be a registered person. So only in this case, the tax is payable under RCM. Again, the same point, you have to assume that we are only talking about the taxable because here again there is an exemption which we study in the exemption chapter. Now, when we come to commercial renting, in commercial renting, what is required is supplier should be unregistered, recipient should be registered except composition dealer. So we all know composition dealer are also registered, but they have excluded them. So whenever the supplier is unregistered, the recipient is registered, then only the RCM on renting of commercial places will apply. So the difference in renting service is between residential and non-residential. Conditions are very different. In case of residential, requirement is only on the recipient side that the recipient should be registered. In case of commercial, For RCM, the requirement is on both sides. Supplier is unregistered, recipient is registered. Now, importantly, this renting service is the renting done by other than government. Because if government is doing renting, it is already covered here. So keep this in mind. This renting is by whom? By other than government. Is this clear, students? Shall anybody, any questions? Students, you may put your questions, whatever you may have till this point before I proceed. Yes, students. Again, Radha beta, what is exempt for transport of goods? As I said, now we'll study in exemption chapter. See, if I start explaining that here, then we will be hopping between different chapters, which will be difficult. So what is exempt for transportation of goods? We study in the exemption chapter. You are saying FCM in case of senior advocates? Yes. FCM in case of senior advocates only in one case. What is that one case? That is where the supplier is senior advocate and recipient is any advocate, maybe senior or not senior. That one service only of advocates is under FCM. Supplier senior, recipient any advocate. Understood? Any questions further? Yes, correct. So where it is vice versa, that a junior is giving services to senior, that will be under RCM. See, Kanhaiya, obviously, whoever is required to pay tax, then that person will have to take registration. Now, importantly, for registration, you have section 22, where for suppliers, there is a requirement or there is a threshold. So wherever the supplier is liable to pay tax under FCM, the supplier will take registration only if the supplier has crossed the threshold. If the supplier has not crossed the threshold, supplier need not take registration and need not pay any tax. Fine, beta? Clear to all? Any further queries? Great. Now some services relating to real estate transactions. So first, whenever development rights are transferred or FSI is transferred and it is transferred for doing construction of any project, maybe residential, commercial, whatever. So supply of development rights or FSI for construction is under RCM. Supplier may be any person. Recipient is the builder developer. So in our language, builder developer, they have used the word promoter. So I'm just specifying who is promoter. The promoter means the builder or developer who is required to do the construction. So that person is the recipient. Supplier can be any person. Similarly, again, for construction of a project, here now you are not transferring the development rights. You are giving the land on lease. And how much lease? Of minimum 30 years. Now, when you give land on lease for a long term, you charge a premium upfront. Correct? Only then you give them rent. You give them the land on rent or on lease. So whenever you are charging an upfront premium, or you may be charging a periodic rent. So either it is upfront or it is periodic rent. So in that case, again giving the land under lease, which is a long-term lease, same condition. So land given on lease to builder developers who are going to pay you either upfront or the monthly renters, that will also be under RCM. Now coming to some common business services. So where a director is giving services to its own company or to a body corporate, that service will be covered under RCM. However, there are some exceptions. First exception, director is not employee. See, you should know this, that in case of directors, there are two types of directors, full-time directors and part-time directors. The full-time directors are on the payroll of the company, and whatever they draw as their remuneration, that is liable to TDS under section 192. Now, the moment you deduct TDS, now I'm saying section of Income Tax Act, the old Income Tax Act. So whenever you are liable to TDS under section 192, it means what you are getting is employees remuneration, or in our language salary. And the moment you get salary, we know as per schedule 3, it is outside GST. There is no question of forward charge, reverse charge. So that is why the first exception, which will not come in RCM, is that director's remuneration which it is receiving as employee and where TDS is applicable. Second, where director is giving not as a director but in an independent capacity. Now you will say, what is this? So assume this, I'm your part-time director. So I'm also a practicing chartered accountant, plus I'm part-time director in your company. Now, whatever you pay to me as the director, that is covered under RC, no doubt. But since I'm also having my own CA practice, let us say tomorrow there is some legal notice coming to the company takes my services. Now I again raise an invoice on them for this service of handling that notice. Now, when I'm charging the company for handling that notice which the company has received, I am giving the service, but not as a director. I am giving the service as a chartered accountant. That is in my independent capacity. So, wherever the director is giving service to its company, but not as a director, because the director is having its own personal business profession. So whenever I'm giving anything to the company, not in the capacity as director, but in any other capacity, that activity of mine will not be covered under this RCM. Please understand this. So for RCM, first, I should not be your full-time director, because when you give me anything as full-time director, it goes in salary head of income tax. So it is outside GST. Second, I'm your part-time director. I'm your technical director. And I'm serving you as a director. Means what you are paying to me is my director's remuneration. But if what you pay to me is not my director's remuneration, it is my any other fees, because I've provided you some other service also. In that particular case, it will also not be under RCM. Yes, Kanaya, you are right. So wherever I am an independent director and you are giving me my director's remuneration, not salary and not my professional fees, that is only what is covered under RCM. Rather, what you have said is not completely correct. See, what director gives to the company, the entire service of director is under income tax. Please understand. And director service is leviable to TDS, but there are two TDS. One is where the director's fees is levied to 192 TDS or the director fees is leviable to 194 TDS. TDS is done under section 192 or TDS is done under section 194J. This is salary, hence outside GST. This is director's remuneration in capacity as director. This is under RCM. So where you are receiving director's remuneration in the capacity as director, not as a professional, 194J TDS is done by the company. That is only what is covered under this RCM. So two cases which will be outside RCM. One, where what you are receiving is salary where TDS is done under 192, that is, it is outside GST. Two, where TDS is done under 194J, but not for director service, but for other professional service that you are giving. This is also outside RCM. Correct? I hope this is understood by you. Yes. Any further questions, students? Students, any further questions? Clear? Now, other similar business services are when insurance agent is giving service to the insurance company. That is a company who is carrying on insurance business. So whatever is the agent's commission, the GST on that is payable by the insurance company under RC. Similarly, nowadays banks appoint recovery agent who are giving services to the bank for recovering the outstanding loans. This service given by the recovery agent to the bank is again kept in RCM. See, Radha, please understand one thing. 194J TDS of income tax is very vast. It covers many components. It covers royalty, it covers director's fees, and it also covers professional fees, what you and me get. Now, please understand one thing. Simply saying 194J is always going to be covered under RCM may be incorrect. That is why I have written where the fees is director's remuneration and given to the director in the capacity of a director. So where the director is serving you as a director, not as any other professional, and you are giving them fees on which TDS under 194J is deducted, yes, it is under RC. But where you are giving the fees to the director and the director is now not acting as your director but acting as a professional, because the director is myself chartered accountant. So besides my director service, I am also giving you other services which is not covered in my director service, like I am giving you taxation consultancy, not covered in my director's role. This I am giving you as an independent consultant. So when I am a director of your company and to the same company, I can give multiple services. What will be covered under this RCM is only one service where I am giving you the service, your company, the service as a director, and TDS is deducted under 194G. That is only under RC. But where I am giving your company another service, which is my CA service, which is my CA consultancy, CA return filing, etc. Again, the company is going to deduct my TDS under 194J only, because for professional service also and for director fees for both, the section of TDS is 194J. But still the difference is when you are deducting my TDS under 194J, but not for my director service, but for my other professional service, then it will not be under this RCM. So this RCM is limited to me giving you the director service exclusively, right? Super. Just give me a minute. Just a minute. Yes, moving ahead. Now the next RCM item is where you are a music composer, a photographer, or an artist. Now, whom you are working for. Now, we are seeing so many movies, we are seeing so many web series. So, there is one production house who hires all these specialists. So, music composer like A.R. Rahman sir, like Arjit Singh. So, they are all music composers. Then you have photographers and other artists, right? Now, when they are providing services to a producer who is producing a movie or a web series, or where the music composer is providing services to the music company for whom an album or something is to be recorded, then in such cases, the services given by them to these people will be covered under RCM. Now, here, important point is Now, what is this services? The service is by way of transferring the copyright. And what is this copyright for? So copyright is for, let us say, there is some story writer who has written a story and given to this web series production house, or there is this composer, or there are so many other artists. So whatever services they are giving to them, which is transferring of the rights to use or enjoy the copyrights of their original work. So I have composed a tune, which is my original work, and I have given this copyright to the music company. Or I have written a story and I have given the copyright of this story to a producer company. Like we saw movies of two states, we saw a movie of this, uh, who is that famous writer, Bhagat. Um, so there are multiple movies which are based on certain novels, or nowadays web series are based on certain novels. So they take the copyrights from the author of that novel, and that copyright is used by the producer for making a movie. So such things are covered over here. Fine. Next. Now comes another copyright. Now here, this copyright is given by an author to the publisher. So again, when I'm an author, I'm writing a book, but I'm giving my copyrights. So same thing. I'm transferring or permitting the use or enjoyment of my copyright. Again, it is an original work, but which work now? It is a literary work. So it is now not relating to any movie or any web series or any album, but it is relating to publishing of a book. So I'm giving my copyright to a publisher. So whenever I am the author, gives my copyrights to the publisher, again here comes the option. So as you can see below, it says that author can choose to pay tax under forward charge. Now, when this option or how this option can be exercised, I'll have to obviously take registration. Obviously, by taking registration, what I will do, I will exercise the option to pay GST under the forward charge mechanism, and I will be complying with all the provisions of the Act. Correct? Second is, I have to give a declaration on my invoice so that the publisher is informed. Also, I've given the declaration in the prescribed form that boss, I am taking registration. I will be paying tax under forward charge. So why to inform him? So that he comes to know which option I have opted for. So again, in case of author's service, which is the copyright given to the publisher for any book, there is option given to the author. Author may opt for FCM by satisfying the conditions. If not, it will be under RC. Correct? Clear? Now comes some simpler services or not very common services. So where the service is what? The service is the service given by members of this committee, and they are giving the services to RBI. This one service received by RBI is under RC. Then you have the direct selling agents. They are giving services to whom? To a bank. Now we all know, or you all know, what is this direct selling agent. So nowadays, many times you get calls saying that I'm speaking from so and so bank and we are providing some credit facility. Like we as chartered accountants regularly keep on receiving such calls where they say that since you are a chartered accountant, you are having a pre-approved loan of 2 lakh rupees, and that is given to you without any collateral, only on the basis of your CA certificate and CA degree. We are giving you that loan. Now, who are these people who are calling? They are direct selling agents. Now, what is very important is they should be individuals. They should not be a body corporate or a firm or a LLP, etc. So when individuals, and nowadays many individuals are doing this, so you get calls for credit cards, you get calls for various products. So when they are giving this services to whom? When they are giving services to the banks, that is what is covered in RCM. Similarly, when there is a business facilitator who is again giving services to banks. Now, who's a business facilitator? So he's a person who helps bank develop their business. So whenever a business facilitator is helping a bank to set up a new branch or set up their business, then the services given by business facilitator to the bank is under RCM. Then comes service given by agent to a business correspondent. So many times this business correspondent who is providing services to any big company has hired some agent. So agent is giving service to the business correspondent, which is again under RC. Then students comes a very important service, security. Now, what is this security? Nowadays, you find that in every of our housing societies where we are saying we have a security guard. If the housing society is huge, having multiple gates, you may have multiple security guards. Similarly, outside many shops like jeweler shop, etc., especially you will find security guards. You find security guards in banks. Plus, nowadays, many people have their personal bodyguards. So all this is security service. Now, when it will be under RCM, when the supplier is a person other than body corporate. So supplier can be individual, HUF, partnership firm, but not a body corporate. And it is providing this service to a registered person. So whenever a non-body corporate, that is individual, HUF, partnership firm, is giving the security services to any registered person. Now important, it is not covering again whom? Government. So I will write it here itself, a registered person except government registered under GST only for deducting tax at. So again, the security office provided, the security services provided to some government department, government office. So many times in government offices, government buildings, you have security guards. Now these security guards are provided, and that government office, that government entity has to take registration under GST, but only because they are liable to deduct TDS, but they are not making any outward supply. So what is very important, wherever the government is not making any outward supply, still it has taken registration. You will find that it is kept in exception. So in such cases, again, there will be no RCM applicable. Correct? Second, a registered person who is registered under the composition scheme. So two people are excluded here, except government and also except composition dealer. So in short, in these two cases, it is not under RCM, it will be under FCM. See, RCM is not applicable mean that only the relaxation given is that the recipient is not required to pay tax. In these cases, wherever the services are taxable service, since RCM is not applicable, it will now get covered under FCM. Now next service. Now we come to the passenger transport service. Now in case of passenger transport service, what is given? The service is of giving on rent. What is given on rent? Motor vehicle, which is designed to carry passengers. And most important part, cost of fuel is included in the consideration or the price charge. So this is covered under RCM, but when? Where the provider of service is any person other than body corporate and who is supplying the services to a body corporate. Now again here students, same like GTA, the service is having two components. That is again when all these conditions are satisfied, there is FCM, there is RCM, same like GTA service. Again, the 6 is changed to 9. So under RCM, it is at the rate of 18%. So wherever, as a passenger transporter, wherever I want to charge GST under forward charge, which is now at 18%, then I will be under FCM. But where I do not want to charge GST, then in that particular case, the case will go under RCM. So in case of passenger transport, similar to your goods transport, there is FCM, RCM option. So I charge GST at the rate of 18%, that is under forward charge. Otherwise, it will always be under RCM. Next is service of lending of securities. This service is given by a lender to a borrower. So when the lender gives the service of lending of securities to the borrower, that is also under RCM. Now, the above was the list which is covered under 9.3, that is under intrastate supplies. Now, all the above services are also covered in interstate supply. So when you are studying the IGST Act related notification of RCM, all the above services are covered here also. Plus, there is one additional service. Let me write the name. Now, for import of service, we have seen in the definition of supply that in multiple cases, import of service will be treated as supply without consideration also, with consideration also, without business also. So in multiple scenarios, import of service is covered as a supply. Now, once it is a supply, most important point is it is covered under RCM. So what is the service? The service may be any service when it is supplied by a person who is located in non-taxable territory. In simple words, because see, taxable territory means India. So where the supplier is outside India and where is the recipient? The recipient is a person who is in taxable territory. Taxable territory means India. So in simple words, it is import of service. Supplier is outside, recipient is inside. It is import of service. And when it is import of service, the tax will be payable by the importer, that is under RCM. So keep in mind, as far as IGST Act is concerned, the RCM notification covers all the above services which we saw in the above notification. Above notification was under the CGST Act. Same copy paste notification or same copy paste services are there in the IGST. So I have not repeated them. I have only taken one service out of that, which is the service of import of service, because this you will not find in the CGST Act because CGST does not apply to import. So this service, which is only covered in the IGST Act, is covered additional to the all above services in the IGST notification. Now, this notification gives some clarifications. So there are some explanations given, and these are very important because we have used these terms above. Now it clarifies that the person who pays or is liable to pay freight for the transporter of goods by goods carriage located in the territory shall be treated as the person who receives the service. So in simple words, now what is this clarification for? So this clarification is for GTA service. Now in case of GTA, you all know there is a consignor and there is a consignee. So goods are sent by consignor to consignee. This is in GTA service. Now in GTA, we saw the tax is payable by recipient, but who is the recipient? Whether consignor or whether consignee. So it says that whoever is liable to pay the freight. So if freight is payable by consignor, we will treat consignor as the recipient and the consignor will be liable to pay tax of GTA service under RC. But if consignee is liable to pay the freight, the consignee becomes the person who is the recipient and the RCM on GTA service will be paid by the consignee. So one of them who is liable to pay the freight will also be liable to pay the GST under RC. Next, we have used this term a lot in many sections, many entries above. The condition was that either the person should be a body corporate or the person should not be body corporate. Now the question is, what is body corporate? So this notification has given the definition saying that you have to refer clause 11 of section 2 of the Companies Act. Now what is section 211 of the Companies Act saying? Companies Act under section 211 defines body corporate as first including a company incorporated outside India. So in short, first is a foreign company, but it says it does not include. Now, who is not included in body corporate? A cooperative society and any other body corporate not being a company which the central government may notify. So in short, body corporate definition will not cover cooperative societies and other body corporates which are notified by the central government, but it will include a foreign company. Students, for very simple terms, if I have to explain body corporate in very simple words include companies and corporations, maybe Indian or foreign. Now, the business entity located in taxable territory. Now, this is for the lawyer service. Who is the litigant, applicant, or petitioner, as the case may be, shall be treated as a person who receives the legal service for the purpose of this notification. So, again, for the lawyer service, if your business entity is located in India, then that business entity will be treated as the recipient and RCM will apply. Next, words and expressions which are not defined here, correct? But which are covered in the act, you will take the definition from there. So this is very simple explanation because we have not defined every word here. Supplier, recipient, supply, everything is not defined. Why? Because you already have these definitions in the respective act. So take the definition from the respective act. Most important point, students, LLP is to be treated as partnership. Why this explanation is important? Because technically, if you see, LLP is also registered like a company. It is having a limited liability like a company. This is where the LLP takes the color of company. But other than that, entire working of LLP is like partnership. That is why we call it as LLP, because it has character of both. But for the purpose of taxation, it will always be regarded as a partnership and not as a company. So what is the relevance of this? In the above notification, wherever the word body corporate was used, you will not cover LLP in that. This is the relevance of this particular point. Next explanation is about insurance agent, who they will be. They are the one who are having the license to work as insurance agent, and the license is given as per the Insurance Act. So only the licensed agents will be treated as agents. If there are any other person who are working as agents but not having the license, we will not treat them as agents. Next, what is renting of immovable property? So it means all these things. What is this? Permitting or granting access or allowing entry or occupation or the use, whether wholly or partly, with or without transfer of possession and control. So we all know this is what is the meaning of renting, but they have clarified. And then last clarification is that the provisions of this reverse charge mechanism, insofar as they apply to central government, state government, shall also apply to parliament, state legislature, courts, and tribunals. So wherever we have seen that the requirement is that this particular RCM applies only where the supplier is a government, it means they are also covering parliament, they are also covering state legislature. So wherever the word government is used, you have to assume it covers parliaments, state parliaments, and even courts and tribunals. So students, this is all for today. We have covered all the reverse charge entries, both of CGST and IGST, and plus we have discussed in detail our charging section, especially subsection 1, 2, 3, 4. In the next class, we'll go to subsection 5, the entries covered under that subsection. Fine. And also, in further classes, we will discuss how to write answers for the different types of questions that you get under the in this paper. So we will also understand the answer writing mechanism. See, Radha, DSA are what? Now, maybe as a student, you may not be receiving the calls. We as professionals, day in, day out, receive calls. They say, I'm speaking from XYZ bank and our bank is offering you loan. Or they will say, I'm speaking from XYZ bank and we are having these special credit cards, which is given to you under a special offer. So these are the ones who are calling you to sell some product of the banking company. And why they are called as direct selling agents? Because they are simply putting you a call and asking you to buy the products of the company. That is why they are called as DSAs. So these are generally people who work from home, they sit from home and they are given the list by the bank, and throughout the day they are making callings, and on the basis of their calls, whatever business the bank will get, these people get their commission. Correct, Radha? So that is what is DSA. So that is the end from my side, students, for today's lecture. I hope you all have understood this. You can refer this from the module in the second chapter of our module. Kindly refer it. And if you have any queries, we can take up your queries in the next class. Till then, thank you very much. Good day. Bye-bye. Thank you all. Good day. Sanket ji, thank you very much. Good day.